FXStreet and NFP. How I look? Am I on? Yeah, when I turn, I'm smoking hot like fire. When I turn, you desire. Hey, good morning. Ni hao ma. Welcome to Trade Non-Farm Payrolls Live. This is the 207th month in a row. Yeah, that's 17 and a half years of doing this one webinar live with FXStreet. So thank you to FXStreet. Standing ovation. Bravo, bravissimo. Did you click the thumbs up button? Huh? Did you share some likes and loves? Hey, good morning. My name is Wayne McDonell. I'm a currency trader just like you. I might be a few years ahead. That's all right, because I learned a few things and I'm here to share. So, I am a servant. I want to help you. Let me know how I can help, and I will do so. Today we have non-farm payrolls, so we need to cover that. We'll go through it. We'll look at some fundamental economic indicators, try to get a handle on what's going to happen. We could talk about macroeconomics, monetary policy, central banking. I have a macroeconomics degree from Harvard. I have a financial management degree. It's a master's degree from Harvard as well. Studied cryptocurrencies at MIT, alternative investing at Harvard Business School, and algorithmic trading at the University of Oxford in England. Also worked at companies like Apple, Cisco, NASA. And then I said, I'm sick of regular boring jobs, and went out into the world and did everything else myself. So cool. What an amazing thing. Hey, remember that guy named George Soros? I sat on a board of directors with him when I was 20 years old. After board meetings, everyone went out for drinks and I couldn't order alcohol. Hey, good start. Good start, huh? Amazing, right? To be 20 and you're on the board. A board of directors. Yeah, with George Soros and a whole bunch of other people. The vice president of Arthur Andersen, the vice president of General Electric, a representative of the United Nations, a former CEO of AT&T. Yeah, and me. Cool. You know what's really, 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 really amazing? Probably about 5 years before that, I was in the middle of rural Canada in a tiny town with one light. One traffic light in the whole city. And an awesome Friday night was hanging out at the gas station because they had video games. And I said, I want to get out of here. I want to see the world. No one else wanted to do that. I want to be a businessman. Nobody else wanted to do that. It was a rural farming community. Everybody was a cousin of somebody else's cousin. And I said, I want to see the world and I want to change the world. And 5 years later, I'm on that board with George Soros and a whole bunch of other big shots. Cool, right? Good start. The message here is you can change the world, and the best way to do it, or at least to begin, is change yours. So we're looking here not to help you improve at trading. I'd like to radically change the way you trade by sharing everything I've learned in Forex and a whole bunch of other things that I've done in my life. Cool. But you got to ask questions. It's your gig ultimately, right? So I'd like to thank FXStreet. 207 months ago, we got together and we said, we want to do something. We want to do something important, and therefore it has to be radically different from everything else that it was being done. And we said we want to cover non-farm payrolls live while the markets are moving and broadcast the charts in real time, showing, well, how to think and how to act in conservative, disciplined ways. She moves in disciplined ways, oh, something like that. I want to teach you how to be a patient, disciplined, independently thinking investor and trader. Cool, right? Nice. So we will try to attempt to do that today. But I'd like to thank FX Street for that meeting. And by the way, I actually found the original email. So we did Non-Farm Payrolls Live #1. It was only scheduled to be 1. And about 15 minutes after the meeting, after the webinar was over, I get an email from FX Street, and they're like, "Holy crap, dude. Let's do it again." And I remember I just finished, and my father was visiting. And he's like, "How'd it go, son?" I said, "I think it made a difference." And he said, "You should keep doing it." And then FX Street came back and said, "We should keep doing this." And I said, "Okay." So that was 207 months ago. 17 and a half years ago. I'd already worked with FX Street on a bunch of things. So I'd like to thank FX Street for the relationship that we've had for almost 20 years now. And that may be longer. That 20 years might be a longer period of time than your last Forex guru was even alive. Yeah, it is an incredible journey. Hey, Adam. But for all those that want to get rich quick, that's not who I am. I'm not going to push you in that direction. You can go find that nonsense pretty much anywhere. I'm a businessman. Before Forex, I was a venture capitalist. Before that, I've run companies of 300, 400, 500, all the way up to thousands of people. So I understand the real world. And the real world is about creating value. Sustainability is about creating value. The volume shouldn't be low. It looks like you're getting high volume, in fact. Let me know about that, and I'll see if I can change. Or change something. I don't know. Okay? So this is the get rich slow scheme. You're going to have to put in blood, sweat, and tears for years. You better fall in love with being a trader, because it will require blood, sweat, and tears for years. It will never get easier. It'll get bigger, but it won't get easier. This is intellectually challenging. So you must be stimulated by the fact that you're going to have to do this all day, every day. I want you to find ways to do more, not cut corners. Do you want that EA that makes you money while you're asleep? Well, why don't you just quit and take a real estate course? Why don't you just do that? How to get rich by flipping real estate. Well, go do that. Because you're in the wrong business if you want to get rich quick trading Forex, or actually anything. It's a fool's errand. But again, if you want to do this the rest of your life, patience and discipline, consistent returns over long periods of time is how to do it. Okay? Jose says, non-farm payrolls are coming out now? Well, I would probably guess they're going to come out at 8:30 like it's scheduled. So, Jose, you're about, 45 minutes off, but that's cool, dude. We'll get there. So today I thought we would start by looking at some of the economic data, but let's do just a quick look at the world and kind of figure out where we are. Oh yeah, just a few things here, a little housekeeping. I guess we should start here. So for the last 20 years, I've been running a community called FX Bootcamp for 20 years. And as of just a couple of days ago, just as July 1st, I've now rebranded the organization and community as Investor Bootcamp, Not only will we talk about Forex, but futures and options. We talk about things like gold, oil, cryptocurrencies, real estate, personal finance. We talk about macroeconomics, central banking. We day trade, we swing trade, we position trade, portfolio construction, venture capital, family offices and hedge fund strategies, all part of our community now. And that's a big deal. That's a really big deal. So again, after 20 years, it's time to get serious. So you might want to check out Investor Bootcamp. Like it says, it's $88 a year, and you get every single one of those training courses, approximately 100 hours, plus I'm adding more as we get going. So pretty cool. I'm also associated with TradersWay.com. If you want a trustworthy, ethical foreign exchange broker, they earned my loyalty and respect about 8 years ago. Visit, open up a demo account, and do your own due diligence, but I'm pushing you over there. Take a look. Check them out. I recommend them. And then lastly, and I want to get to this, this is another service that I own. It's called QuantBox, and it does all your macroeconomic research and comparative analysis automatically for you. There's an $8 trial. You can check it out. I want to log into it now. Okay? Even in your trial membership, which is only $8, you get the entire macroeconomic training course included. Yeah. It's 13, so it's probably about 15 or 16 hours long. That's included in your $8 trial. There's also a training course on, like, if you don't know how to do statistical analysis, if I show you a scatter plot and it blows your brain, there's a training course on that. So anyways. Oh, I know, Jose. I'm just, yeah, I'm poking you. Just having fun. Yeah. Like, for example, if you didn't know what a scatter plot is, scatter plots are really cool, man. Check this out. This is real-time data. All this information is coming out of live data sources or government agencies or private databases. Okay. And so what you're looking for is out of position, the size of the move, the relative size of the move, but also the expected move. So like, look at Bitcoin. Holy smokes, down 3.25% today. Amazing, right? So let's get rid of that outlier. Okay, the biggest losers right now are down about just over 1%. Biggest winners are only up, 0.5%. Okay, but the way that you look at a scatter plot, let me get my drawing tool. I'm trying to do this quick because I want to get to something else. But you might find this radically helpful. All right, here's a zero line. Here's a zero line. So if you guys are familiar with calculus, this is kind of in that vein. But what you're looking at is everything in this quadrant here. So let's just label them 1, 2, 3, 4. Okay, all right. So there's 4 different quadrants. Everything in quadrant 3 were assets that were already expected to fall. Everything in quadrant 2 are assets that are based on economic data, the gathering of economic data, and then comparative analysis of that data for one asset class compared to another, like gold versus dollar, for example, or New Zealand dollar versus US dollar. When you gather all the economic data and score it all up and then do comparative analysis between the two economies, you would expect Kiwi dollar to be up. That's what QuantBox is doing here. So everything up in here is expected to be up and is actually up today. So it's long-term versus short-term. Everything down here was expected to be down on the long-term fundamentals, and in fact, on the short-term technicals, fell. So everything in 3 was expected to fall and has fallen. Everything in 2 was expected to rise and it has risen. One was supposed to fall but is up, so out of position. And everything down here was supposed to rise but has fallen, so these are out of position. Now you might say, oh, this is all wrong. No, it's not wrong. What it's telling you is the long-term fundamentals say up. But what has actually happened today is fallen, so maybe those are tomorrow's dips that you're buying. And by Monday or Tuesday, they're back up here where they should be. Those might be your dips. You see? These might be your opportunities. They're supposed to be up, but they're down. That's a dip, right? Maybe. And these are supposed to be down, but they're up. So maybe that's a rip. You sell the rips and you buy the dips, right? Maybe. They might be tomorrow's trades. So I just want to highlight that. And if you're like, wow, that's just wowzer. And, you know, these are based on scores. How bearish were they expected to be and how bearish did they become? So the closer to this corner, the better, the higher and closer to that corner, the better, and so on and so forth. So it shows you also relative difference to the expected outcome. Maybe a bigger opportunity, right? Cool. What I want to get to is just, let me expand this up so I can get the menu. Okay, pop the menu out. By the way, this is all sitting on the Google Cloud. These are all databases. These are not images. We're actually manipulating the QuantBox database. But I want to get here. This is a summary that we use to look at what's happened over the last week to give you sort of like medium-term trends. And by far, the biggest mover to the upside is the yield on the 10-year T-note. So the bond market is crashing. I hope you know that. The bond market is crashing. Wowzer. Holy smokes. And yields are skyrocketing. Turns out the Fed is what? Selling all as many billions of dollars worth of bonds off their balance sheet. So the Fed is selling in here. But the Treasury is also selling $1 trillion. So you got the central government and the central bank selling into this market. And just in the last 7 days, up 9%. That kind of move is like reserved for cryptocurrencies, huh? Okay. Some of the biggest losers here. UK's, right? British stock market's way down, 3.5%. German stock market way down, 3 1/3%. Japanese stock market down almost 2.5%. By the way, I have all that lined up to happen anyways. So good. Good. Okay. Gold slightly up for the week. S&P 500 slightly up still for the week. Dow slightly up, basically flat for the week. CR Car Vlog wants to know about gold. Should they buy or sell? Are you want me to give you financial advice? Cool. Yeah. Give me a few $1,000,000. I'll confirm you're a qualified or at least accredited investor. I can give you advice. Otherwise, why don't we talk about why you would want to buy gold so we can get there? How's gold doing this week? Barely moved at all. So you want to buy some of that? It's not doing anything. So anyways, it gives you an idea. Are we risk on or risk off? All that kind of stuff, right? But let's talk about it. Several of you guys, Isaac asked about gold. Morgan asked about gold. Okay, great. Okay, cool. All right, tell me, why do you want to own it? Talk to me, Goose. Why do you want to own that asset? Give me the logic. Why would anybody buy gold? Income? You like the yield it pays you? Hello? Why would anyone buy gold? Come on, guys. Multiple people asked. Okay, good. Let's do it. The whole world is crazy about gold. No, they're not. I would disagree with that. You might have to change your world to earn profit. Okay, how? How? Just tell me. Why would it earn any? Give me the logic. Look, again, I'm an economist and I'm a financier. So I get it. You want to make money. Why will it make money? Why? You have to, don't tell me because you want to make money. No, how will this investment make you money? Central banks are buying gold. They're not buying gold. See, I don't know where you're getting your information. To hedge inflation. Okay, let's talk about this. Okay, let's talk about this. How many people believe we're in an inflationary world? Morgan says now interest rates are going to go down everywhere and it turns gold up. Well, let's continue talking about this. Some of you have it asked backwards, and then some have sort of half-truths or kind of truths. We are in a disinflationary period here. So everyone that said you should be buying gold to hedge inflation, dude, it's been over a year and we've had disinflation. Unless you live in the UK. Okay? In the United States, we had 10% inflation and we're on our way to like 3%. It's disinflationary. We're in a disinflationary world. You don't have to hedge falling inflation. You should have bought. So let me tell you how, and then someone else said central banks. A couple of people said central banks. Okay. What should we? I guess I could just pull up gold. Let's do commodities. Here's gold. Okay, we'll go out weekly. All right. All right. So, where's my drawing tool? Okay, here's my drawing tool. I got to move it a little closer. Okay. This is the period of COVID. That's when central banks were buying. Why were central banks buying gold? Well, this is when inflation went from 0% to 10%. Okay, so when your YouTube guru told you that you should be buying gold because of inflation, you should fire them. They have no idea what they're talking about. This is probably their first recession of their entire life. Gold went up back here during COVID when inflation went up. But then the other thing, so that's hedging inflation. But the biggest move here, and it had to do with this move, the second move, this is when central banks like India and Israel, which I can prove to you, is when gold really went up here. Central banks were buying gold. Why? So let's talk about India, the Indian rupee. Okay, India was shut down, locked down. The whole entire economy was locked down, 1 billion people. And that puts a demand on cash because you're not earning money, so you have to spend your savings. And, well, guess what? A lot of money was invested overseas. So all of a sudden, all at once, India was demanding rupee. They needed local cash. There was a cash shortage. So people said, we need money to buy food and all this kind of stuff because we can't work. So suddenly the value of the Indian rupee skyrocketed, and this causes a problem because their economy was also in shambles, and you don't want a strong currency, especially if you're an exporting nation like India is, and an exporting nation that has to compete with China and Japan. So you don't actually want an overly strong currency. So the Central Bank of India took their balance sheet. You have liabilities and you have assets. They had cash, and right, let's say they had gold, and they had bonds. Okay, so how does this central bank use its balance sheet to address the concern of an overvalued rupee created from exponential increase in demand from the black swan event of COVID? Are you guys following me? There's a problem globally. Indians need cash. There's now a shortage of cash. The money is overseas, so they need to get the money back home. That increases the demand. So now the rupee is overvalued, and this is a problem for the Indian economy. So India then goes in, sells gold to increase cash. Or no, sorry, no, wait, I'm in reverse. They buy some gold. They buy gold and they push their cash into the economy. So now the supply, so now you got to go like this. So Indian rupee, this is the price, this is the quantity, okay? This is demand, this is supply one. So there's now less gold or there's now more gold in India, but right? And then the cash is taken out of the vault, pushed into the economy. The supply of Indian rupee goes to 2. So here's the 1, 2, 3, 4, 5. So we go from quantity 3 to quantity 4, or whatever that is. So the quantity of Indian rupee goes up, and now the price goes from P1 to P2, which is down. So the per rupee value falls, okay, dropping down the overvalued Indian rupee. So when you guys say central banks are buying gold, they did that in late 2019 all the way to early 2020. And you can see it here. Now, the issue is, why would they do that? Increased demand, pushed up the value of the rupee. That's bad for India. So India just rebalances its balance sheet. Notice the assets are still balanced. So they bought gold and they shorted cash, increasing the supply of money in the economy, which is called liquidity. Okay, so now we're way up here. Now what? India's facing an inflation crisis. So what do they do now? They sell their gold to increase their cash position. Okay, and now what? The price of gold falls, the value of the rupee goes up, and a stronger rupee is disinflationary. Oh my God, that makes sense. Of course it makes sense. So be very, 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 very careful who you're listening to when it comes to gold, huh? If somebody tells you their gold should be going up because of inflation, they have no idea what they're talking about. None whatsoever. Okay? Krishan says, yeah. But back then, right, Krishan, if you look at the number, when India bought gold in this time period right here, it was the biggest amount of gold that the Central Bank of India ever held in its entire history. India never had so much gold ever. I'm not talking about a little difference. So now it would make sense that if you're an inflationary economy, you could kind of, right, you can buy up some of your cash, remove some of the cash, and drive up the value per unit. Andrew says India's population is projected to exceed China this year, possibly. No, they already have. They already have. Yeah. But it's also flat. It's also stable. Okay. So that's good. So this is simple macroeconomics. Okay. Maybe join FX Bootcamp. Like, by the way, if you're new here, half of everybody in this room is now a member of Investor Bootcamp. Probably more than half. So check it out. Also, FXstreet has a lot of information. Okay. Take advantage of what's out there. So this is a weekly. We might say there's a bit of a top going on here. And then when you do shorter term analysis, okay, you want to identify your support and resistance and then have trends. Okay. So HQLYKN Hecklin wants to buy gold. Sweet. By all means, go ahead. Why didn't the United States do the same like India? It's a reserve currency. It's different. Okay? All right. All right, so cool. So I want to do some other research, and I think we're going to have to do it quickly. Let's do... let's start doing some research here. Oh, there we are. Boo, 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 boo. I guess we can just do this. Boop, 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 boop. Okay, so we just want to look at the employment subcomponent. The service sector, which is by far the largest part of the U.S. economy, is growing. The employment subcomponent of the service sector is actually growing. It was contracting, now it's growing. How does that impact non-farm payrolls? How will that impact non-farm payrolls? The service sector, the largest component of the U.S. economy, is adding jobs. Ravens astute. More jobs, higher number. Okay? So let's manipulate this, get a better data set. Okay, let's zoom in a little more. I think that'll... Okay, so starting 18 months ago, the weekly jobless claims was 232. And in January of this year, it was 194. And now we're 248. So we went from 200 to 250,000. Is that a dramatic change? These are people suddenly looking for work. Is that a dramatic change? Well, Michael, you can't say flat. The difference between 200 and 250,000 is a lot, but it's not dramatic. Okay? But you can't say flat. Okay. Statistically, that is relevant. But look at the change that we were having on the way down, right? And so we've been at, let's say, around this 2,250 level for a couple of years. So pretty steady, right? So is there an indication here, like, is this number going back a few months dramatic enough to say non-farm payrolls is going to be a small number today? We're being subjective here. Well, June 262, right? June 3rd, 262. June 10th, 264. June 17, 265. June 24th, 236. July 1st, 248. So it's actually less than a month ago, which means I don't think you can expect a ridiculously low. Oh, good. That's not bad. This is not suggesting, if we're going to look at evidence, this is not suggesting a significantly smaller non-farm payrolls. Okay. Okay. We could look at we can do ADP, another dumb prediction. Okay. So the 250,000 or something was expected and it came out double. Does that suggest a smaller number or a larger number? Sure, Lee. Yeah, Lee's right, but we are just trying to model the non-farm payrolls number. All right, so we have ISM services pointing to growing, not contracting. Weekly jobless claims, even kind of jobless, which is the difference, like jobs are increasing. Then we look at private jobs. So this is small and medium-sized businesses, doubled the expectations, but certainly not low. It points to high. So now let's move on to layoffs. We'll do Challenger, Christmas, and Gray, or I always mix it up. Challenger, Christmas, and Gray. Challenger, Gray, and Christmas. There you go. Boom, 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 boom. Boom, boom, boom. Boom, 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 boom. Boom, 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 boom. Boom, 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 boom. Boom, boom, boom. Nice site, dude. Nobody cares about this crap. Where's the report? They started placing this stuff somewhere else. They've made the site more confusing. Okay, there we go. Check this out. Okay, this firm, one of the things they do is they track mass layoffs by corporations. You know, when you hear news like Facebook's going to lay off 10,000 people, that kind of stuff. Check out this report. Job cuts drop 49%. Is the tech purge over? 49%. Okay, 50% less mass layoffs. Does that point to a bigger non-farm payrolls number or a smaller non-farm payrolls number? Less people are being fired. Less people are being fired. It's bigger, guys, bigger. Companies are not laying people off. They're not in trouble. There's no recession. Okay? Which means non-farm payrolls is coming in higher. Thank you. Just think about the logic. Now, Lisa's as expected. Well, okay, I understand what your opinion is, but what we're doing is quantitative analysis, Louise. So you might be right. I don't know what the future is. But ISM services was contracting. Now it's expanding. The jobs, the employment subcomponent of ISM services was contracting. Now it's expanding. Those companies are hiring. Non-farm payrolls would be bigger, that suggests. People applying to get unemployment insurance is about the same and even a little bit less than a month ago. They are getting jobs. Companies are hiring. ADP, small and medium-sized companies, hired twice as many employees as expected. They're hiring like crazy. Then we look at job cuts from big companies. Are big companies laying people off? Okay, 50% less layoffs. They're not laying people off, they're hiring people. So once again, I don't know what non-farm payrolls are going to be. And yes, Luis says as expected, it'll come out 200 and something. That might be true, but then I say, how do you get to that conclusion? Because I just looked at some basic facts and none of them said that. So I'm not disagreeing with you, Lewis. I just don't know how you got to that opinion. So I'm like, how did you get that opinion? I feel it in my gut. Okay? Okay? From the Fed. Okay, I don't know what you're talking about there. How many people here read the Fed meeting minutes that came out on Wednesday? It said they expect the job market, or they know the job market is stronger. Okay? Is strong. Surprisingly strong. Okay? By the way, every member of Investor Bootcamp has read the Fed meeting minutes. We discussed it in groups and then as a group. We went line by line through the entire thing. So if you're a foreign exchange trader and you're not doing this stuff, half the people in this room are out hustling you. You might want to join Investor Bootcamp because half the people in this room are ahead of you. So anyway, I read that report. I was at the meeting when Jay Powell gave his speech and then was interviewed by the press. I listened to every question. Okay? So interest rates are going up, but what we're talking about is non-farm payrolls, and they recognize that the labor market is stronger than they expected. So they're not expecting a huge negative non-farm payrolls. But nonetheless, let's talk about the facts. And we've talked about a whole bunch of facts right now, and none of them point to low or even as expected. Now, this is a complicated math equation. There's the establishment survey, and then there's a household survey, and then they do hocus pocus math. They talk to a few thousand people and extrapolate 330 million people worth of numbers. The level of error is massive. Okay? Now, Louis says, I'll take a wild guess of 300,000. Yeah, but I'm not interested. I don't want to buy your wild guess. Why don't you go to, imagine you worked at an investment bank, or like you work at Goldman Sachs or JP Morgan, and you have institutional clients that say, well, what do you think about non-farm payrolls? And you said, well, I'll take a wild guess, 300K. I mean, dude, what the heck are you talking about, Louis? Like, what are you talking about? So you're like, well, we looked at this, we looked at this, we looked at this, we looked at this. And so when you model that, it seems like it's going to be high. Okay, what does it mean? If it actually comes out higher than expected, it means the Fed absolutely will raise 2 more times. But maybe even a third time. Maybe are we on our way to 6.0? Yes. Am I saying USD will gain? I'm saying if non-farm payrolls was higher than expected, yes, the dollar would probably get strong. Okay? Okay? Richard says you could do probability analysis to guess the number. Well, on the registration page at FX Street for this event, I gave an entire document on how to do this modeling. So it's easy. Yeah, sure. So if the USD is going to be, right, so yes. So Georgie's on his way. Yes, let's thread the thing. This points to a higher NFP. If it comes out a higher NFP, then maybe all the interest rate increases have not been priced in. So that would have to be priced in more, which would lead to a stronger dollar, which is 2 things. Stronger dollar means less dollars needed to buy gold, so the price of gold per unit of dollar falls, so the price of gold falls. But there's also less need to own gold because strong dollar is disinflationary. So inflation drops a few more ticks. Falling inflation means no need to hedge because it's already falling. So you probably don't want to own gold. You're hedging. You're not hedging. In fact, you're doing the opposite. Your grandpa would be upset if you saw what you're doing today. Okay, so yeah, I could see that. Gold could come down. The dollar could go up. Yeah, for sure. Remember, we're addressing aggregate demand. So the U.S. stock market's probably going to fall. Yeah, Bitcoin's probably going to fall. Oh. So to understand those correlations, again, I invite you to join investorbootcamp.com. Something I've been running for 20 years. Learn how to invest and trade into everything because I'm a macroeconomist. I'm talking about aggregate demand. I'm talking about aggregate supply. So yeah, if NFP is up, I can think of probably 5 or 6 or 7 trades to do. Yeah. Okay. What do you think would trigger gold again? Well, how about inflation no longer falling? So stable inflation construct. And an increase in aggregate demand. What would do that? See, when the Fed is raising interest rates, everything in the world gets more and more expensive. No, see, stagflation is not good either. So if you've lost all your money, how much gold are you going to buy? Okay. Stagflation is just a slow burning forest fire. There's no wind, but the trees are burning. It'll just take a long time. And at the end of it, the end of stagflation will be deflation. because everyone would have lost their job. All spending would stop, and inventories would skyrocket, sales would fall, asset prices would fall, and you'd have a giant reset of the economy. And all that phony baloney money that led to stagflation is destroyed. All the overvalued asset prices are reset, and we begin again at the bottom. Not recession again. That would kill aggregate demand. If everyone's lost their job, nobody's out there buying a new car. They're buying used cars. What would be the catalyst for commodities bull market? J-Man, it's the same question I just asked about aggregate demand. Aggregate demand is the demand for everything. That's what aggregate means. So if gold goes up, wheat should go up. What would cause this, guys? Think about this. You need a big change to make the supply, or in this case, the demand for everything to go up. The demand for everything. Higher salaries, no, that's inflationary. That's sticky inflation. No. So that's actually not good. So that raises inflation, and what we want is stable inflation. How do you feel like you're richer without being richer? Okay? This is the secret to global trade. If we want peace on earth, we need free trade for everyone. So you want to, right, increase your standard of living, not increase your wage. You want things to be cheaper, more affordable. You don't want to have more money, because then more money just pushes up prices. Now what? You have a 5% raise in your job, or in your salary, but prices went up 7%, so you're actually worse off. So what you'd rather have is factories are making twice as many TVs, so TVs are half price. So now you can either get more TVs or bigger TVs. You understand? So we need an increase in productivity, and this would come at that turning point from central banks cutting interest rates. The name of your academy, investorbootcamp.com. So when the Fed actually starts cutting interest rates, then yes, if you want to buy some gold, I wouldn't be against it. Okay? Since I've answered the question multiple times in multiple different ways, Got T, and you don't understand, you shouldn't be trading. Okay? Simple enough. Even when I tell you, you don't know. So you shouldn't be trading. Manus! What's going on, buddy? So we're just a few minutes away. So we will move over quickly before we look at the euro dollar. Let's see. Yen relatively strong right now. Dollar relatively weak. India. Yeah. Oh, we were just talking about the central bank. CAD getting crushed. Kiwi getting crushed. Pound trying to recover. Wow, the volatility there lately, huh? Aussie getting crushed. Euro getting crushed. Yeah, nothing's looking good at all. Georgie, yeah, that's fair. If the number, it's more like if the number is higher, those are the things that I would expect. Now, would you just go buy, sell, 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 sell? No. Now you go onto those charts and you set those up. No, that's not how to do it, Georgie. Now you're taking it one step further. Okay? By the way, I wrote a whole article on how to scalp this, guys. I'm assuming when you registered, you clicked on the link that FXstreet gave you that outlines in great detail exactly how to not just create your own model for non-farmer payrolls, but I give you the high volatility event-driven strategy trade and the counter trend trade. Okay? But it's not even that, right? Alessandro says we need the NFP reports first. Yeah, but the dollar strength could last more than 20 minutes. It could last 20 days. So yes, you could get a little scalp, but that's not really what I'm interested in. Oops. Okay. So you could probably let this come and go and then set it all up. Alessandro says, the model I already did. Yeah, well, again, I want people to know how to do it. And so if people are like, I don't know how to get that number or what it means, and then, Wayne, tell me what to do. Should I buy or sell this? You're not listening. You're not learning. I want you to learn. I'm trying to teach you. So anyways, we could look at the euro dollar. So let's change this. We'll change this. We can assume, if you want, a bearish point of view. Okay, and I'll show you this chart. It's not a great chart, but we are slowly moving along. Okay, so we have a high, a lower low, which is important, right shoulder. Okay, okay, lower high, lower high. So the number this is what could happen today. And this is Monday. And then this is Tuesday. And so in the next 2 hours, this could drop and then rise back up. Sure, that's volatility. But I'm much more interested in the trend. Right now, I can see it's bearish and cautious because we're waiting for the news. It is currently bearish and it is cautious. Let me go here. Oh, what am I doing? Forgotten where the page is. Shoot. Hang on. Where am I going? I was trying to find the, there, this is what I'm trying to find. Boo. So let's get some of these numbers. Okay, 209 is not bad, huh? Okay, 209 is not bad. That might be a relief. Unemployment ticked up a little bit. Interesting. Participation rate up a little bit. Oh, that's Canadian. Okay. So not bad. Average hourly earnings stable. That's good, but not. It's not worse. Okay. A little change there. Hours worked a little more. That's all right. The government hired 50,000 of the jobs. Private, 149,000. Manufacturing, almost none. So a huge percentage of that is actually the government. So it's much less than expected. So you see USD weakness right now. Okay. Luis, again, you can, right? Yeah, Luis, you can throw out your guesses, but it's irrelevant. But I'm glad you're not wrong. How about, let's say it that way. Will the Fed pause this month? Absolutely not. Absolutely, totally not. All right. But now here's what you need to do. You need to do your job. Okay, cool. So, I don't know why. I can't. See, I've had to shrink my charts to get this chat going. Maybe if I do it this way. Okay, I want to draw this. That's what I'm trying to do. Okay, cool. And now, if you're doing a high volatility event-driven strategy, as you guys probably know, you fib. Oh, and I need that stupid thing again. I got to move this around. Hang on. I guess I can put it down here. I guess I can just drag it. All right. Let me resize this. Okay, the second thing you want to do is identify this area. And if you're gonna do a scalp, you're thinking something like this today. Okay. Link to what? Jose says, so could this data mean a recession is coming? No. No, not yet. Can somebody get the revision from last month? How much was last month's headline number? Okay. Yeah, but what was the change, Jim? Okay. All right. So, yeah. Okay. So they dropped it down. Thank you, moderator. All right. So, yeah. So that's helpful to know. We have to put that in our model. All right. Somebody wanted a link to my report, Non-Farm Payrolls, how to prepare for and trade the employment situation report on FXStreet. Bum, bum, bum. Okay, there you go, Brad. That's for you. Okay, let's quickly look at the indices. Dollar's weakening. So remember, we were saying if the number came out big, the dollar gets strong. Well, the number didn't come out big, so the opposite would be true. Yeah. Everything else is about the same, huh? Euros, you know, when the dollar gets weak, the euro goes up. Okay, I can see that. CAD's still quite weak, and we had the Canadian non-farm payrolls, yeah. Euro or yen still kind of weak. Let's take a look at the yens quickly. So yeah, let me move my stop to break even on this trade. I'll cancel this trade. So yeah, so now I got caught in the ebb and flow. It's fairly good news for the global market, so I might get knocked out on this. Yeah, what do you think, Manus? Investor Bootcamp now. We're expanding our reach, if you will. The conversation of an FX Bootcamper is just expanded into so many other asset classes that the 4x, $7 trillion a day isn't big enough for us. CAD yen still having a tough time. This has been a big mover down. Okay. Yeah, so CAD's still being pulled down. How about this one? This was very bullish. Then it made a lower low, lower high, lower low, lower high, lower low, lower high. I wonder what's going to happen next. Yeah. Well, Richard, what day did I say to be ready for reversal in these numbers? Yeah, Dakar, you're right. Yes. You're short Euro yen and CAD yen and Aussie yen. Yeah. Canada Day. Yeah, Dakar, that makes sense. Yeah. Cool. Richard says, you've been saying to watch for this for 2 weeks now. I would even argue 2 months would be fair as well. Okay. Yeah. I'm like, look at this. I'm like, look at this. And then look at that. Like, it's all changing. Lower, low, lower, high. Yeah. Pretty wonderbar. Yeah. Yeah. No worries, Dakar. So Denise is waiting for a 2155. Yeah. And of course, like on this asset, that's happened. Yeah. Okay. So what's the target? Let's just pick on this. So if Denise is going to wait for, let's say, a Monday rally and a Tuesday, or let's say like that. Okay, great. What's the target? Jim's got the Pip Pirate accent, huh? 100% agree. Nice. What's the target, yo? Manus, about 93.5. Oh, you know I hate that answer, Manus. What do you mean about? Yeah. Target third week of September. Yeah, you could, but I can't get you a price on that. But yeah. The target is 89.5. That is my projected low for the month of July. So does Denise have time to wait? Yeah, sure. Okay. Yeah. Hmm? So Ravi says, gold buy this. Yeah, I'd say on the short run, if the dollar's weak, let's go back to commodities. Sure, if gold is weak, sure. Um, okay, but it doesn't. I mean, changes the short trade, the short-term short trade. Okay, so this little trade bails out. Okay, you could say that has failed. Remember, though, nothing has actually changed. Will the Fed change their policy now? No. Okay, Ravi? No. Will the Fed now say, oh, God, we were going to raise interest rates, but forget it now? No, no. Okay. You see that? Yeah, they are very, very hawkish, Sky Killer. They're very hawkish. They're going to raise 2 more times, irregardless of today's non-farm payrolls. Oh. So then ultimately, the fundamental analysis of gold hasn't actually changed. Now, could you scalp gold and make a few bucks? Could this go back to 2000 and then drop again? Yeah, maybe. But that's market. That's a market thing. And that's where you use technical analysis. But remember, if you're going to be strategic about your trading, you start with the strategy first. And the strategy being in a general market conditions of disinflation. Okay? So I'm on this daily chart now. Okay? And this is bearish and aggressive. So we had a partial green candle today. I would say there's a pretty decent probability that we've already printed the high in gold today. And that over the next 2, 3, 4, 5, 6 days, we'll actually make another lower low. What do you think? You guys following me? So you can do what you want. You do you. You go ahead and chase candles. I don't do that. What did Ken Griffin say? We need liquidity from retail traders to execute our research. So somebody with no plan or no strategy, willing to chase gold because of a pop on non-farm payrolls, and now they're going to buy it. And they don't even know why they're buying it. And in fact, they're buying it for completely wrong reasons. It's like, dude, I don't really care. If you're not going to see, I don't know what's going to happen. So I'm not going to portray myself as being a prophet guru where I see the world my ways, my way, and all that kind of stuff. And my way's the only way. Look, I don't know. I have to make decisions so I can make money too. You know, I have to make decisions. But I'll tell you what, I am trying to teach you. So for everybody that is logged in today, should I buy? Should I sell? What about gold? What about euro dollar? I'm trying to teach you. There's a pretty good chance you're not going to listen, so it doesn't matter. But most people here do want to learn. Okay? And what I'm trying to tell you is I've done research. I believe I understand what central banks are trying to accomplish and the strategies that they use. to accomplish their goals. And I actually read the reports. I don't listen to other gurus. I don't listen to the media. I read all the reports. I go to all the meetings. I only have my research. And I will say, in my humble opinion, I believe we're in a disinflationary period, disinflation. And there's absolutely no reason to hedge. It's actually stupid. If you're hedging inflation by buying gold, I couldn't disagree with you more. I'm like, I don't get it. I don't think you understand what's going on. But that's you. You got to make your decision. And I'm like, I don't think central banks are doing what you're telling me they're doing. I don't think they're doing what you're telling me. I think they're doing what I think they're doing because I'm doing my research. But look, I can be wrong too. So I'm not arrogant that way, but I am confident because I've done my own work and I've done my own research. So I'm like, there's no hedge here. There's no inflation. This is disinflationary. Okay, great, fine. The Fed's going to raise 2 more times. That'll probably bring some strength here and lower inflation more, which lowers this. So in my humble opinion, okay, we get a green candle, or look at this. We even had like a hanging man, then a green candle, then a green candle, then a green candle. Yeah, dude, here's what I think. I think we're going to be down here in a few days. So you can buy it today. I'm going to sell your high tomorrow and probably take you out of the trade. It's okay. I might lose money on that. You might lose money on that. I don't know. But I know exactly what I intend to do because I already know why I want to do it. Okay? You see? So, great. So I look at this and let me mark where we are like this. Okay? Drop into a smaller time frame. That's probably today's high. And so now the world has to figure out what to do next. Yes, it was a better than expected non-farm payrolls, but the Fed's still going to raise 2 more times this year. And that strengthens the dollar. Can I get a whoop, 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 whoop? Okay. Caribou says right now that the market disagrees with the Fed. And I don't fight the Fed. Yeah, I don't fight the Fed at all. So, yeah, good for them. See, again, I don't know the logic behind their trades. They might have a very good logic. One of the things they might be doing is shorter term trades than me. Okay, that's fine. Or there's a lot of people that are making a mistake. Maybe there's a lot of people, even though they're in high, powerful places, is it possible that they're just not very good? Is it very possible that they just listen to everybody else and make decisions? Is it possible that they're just not very good and they make the wrong decision, they make the wrong interpretation? Is it possible that they're just lazy and they don't actually do the work? They just go out on CNBC and Bloomberg and just spit out their psychobabble of what they think and how they feel. Who gives a crap what you think and what you feel? Look at the facts. Make a decision. Explain it to me. Talk to me like an engineer. Give me the facts. Give me the conclusions. What's the probable outcome? Oh, but I feel the Fed is... I didn't ask you about how you feel about the Fed. Oh, well, if I ran the Fed, I would... I didn't ask you what you would do if you were at the Fed. I want to know what the Fed's going to do. I want to know that Bostic and Bullard are the 2 dissenters and that every single person on the FOMC and Board of Governors wants to raise interest rates a lot. Except for Bullard and Bostic. 2 out of 18 want to keep interest rates the same. Dude, they're going to raise big time. And by the way, I'll give a little hint to everybody that hasn't done the homework. Every single person at Investor Bootcamp has gone line by line over the meeting minutes. There's one thing that I highlighted specifically where it says several, what was the wording? Several people wanted, what was the wording? Several people on the committee basically disagreed. And yet it was a unanimous decision. Right? Think about this. It was a unanimous decision, but most people, if not, right, many members wanted to raise interest rates at the last meeting. Many. And when they voted on the dot plot, so now you have to talk about the summary of economic projections, they say raise at least two more times. A couple of members wanted to raise 3 more times. And yet they unanimously paused, which is nonsense. So if you want to be in the room with the decision makers, you got to be an investor boot camper. Yo! And you would know that it was not a unanimous decision. It wasn't even close to a unanimous decision. Okay, the official report was unanimous, but almost all members disagreed with the pause. So Jay Powell gets what Jay Powell wants. But the truth is, the Fed's going to jack up interest rates way more than what the market's pricing in. So somebody said, well, the market seems to disagree. I don't know why they disagree, but I bet you that they're either not smart enough or willing to do the work. And that's okay by me because that's what puts my kids through college. I have 2 kids, and in the United States, you need $250,000 per child. So some lazy or some stupid person is going to put my kids through college because they're not going to make a decision better than mine. Not that I know everything, but I do gather the intelligence and formulate a strategy. And those that are wrong, they're going to be on the other side of my trade. That's fine. That's fine by me. It doesn't matter. It doesn't matter to me. Okay? I love being a Forex trader. I love being an investor. I love it. So I love reading the meeting minutes. I love reading press releases off the Bank of Japan. Oh, a fan for Thailand. Awesome. Hey, by the way, speaking about Thailand, and I immediately, like everybody, think, oh, what an amazing, beautiful place. Okay. I want to do some traveling. Where are we going to do a meetup? Where in the world are we going to get like 100 people together and do a meetup? We'll do some sort of training. I'll have to charge some sort of fee so it covers my travel expenses and stuff. But we get together and we do something. We could have a cocktail party at the end of the day. We can all get to meet each other and hang out as traders and investors. I'm thinking Hong Kong. I'm thinking China. I'm thinking Singapore. I'm thinking London. I'm thinking New York or Toronto, Beverly Hills. Where do you want to go? I want to go somewhere beautiful. Monaco. You want to go to Cape Town? Minsk is nice this time of year. Dubai? Yeah, I haven't been to Dubai in a while. I need to get back to Dubai. Montreal. Bali, I've never been to Bali. Yeah, South Africa's nice, yeah. It'd be a cheap time to go with the rand being so weak again. Odessa. Are there nice hotels in Odessa? The thing is, Odessa is interesting because there's a watch dealer there I want to visit. Vince is bored with Singapore. Yeah, but I like Singapore. It is boring though, isn't it? But I like it. Yeah, I like it. The Ritz in Laguna Beach. Yeah, I was there when I was a young man, and I got $1,000 bar tab, and I was surprised because I basically had salad and water. My wife and I am like, wait, what? How much is this bill? $1,000. But we had like salad and water. Japan, actually, I will probably be in Japan in 2024. Yeah. Yeah, Cuba. I need to get back to Cuba. I'd like to go back to Cuba this year if possible, or early next year. Cape Town. But I'm thinking fall. I'll be back, and this time leave Havana. Malaysia would be great. I have a friend that I'd like to visit Malaysia. He runs a company called Mind Valley. He's an old friend. He actually used to work for me. Yeah, I love me in Malaysia. Let's go to Malaysia. I mean, I'm telling you. So help me gather people, and we'll get out there, huh? What should we do with gold? I don't know. I just told you what I think the top is, and I just told you where I think gold is going. So you tell me after that. I mean, I don't know. What do you think my chart says? There's a couple of... Let me explain my chart if you don't understand it. Okay? This is my sell zone for the week. Angola? I'd be interested in Angola. It'd be interesting to visit an oil field, yeah. Maybe zip over to Nigeria as well. Kind of do a Nigeria-Angola thing. And then party in northern South Africa, and end it in wine country. I know a guy that lives I think he lives in the northwestern mountains of South Africa. Is that right? Sort of wine country-ish. He tells me it's a blast. He has a Ferrari, and he drives down this, apparently the side winding hills of that area in his Ferrari. It's an old 308, but they're reliable cars. And the roads are no so good. So, yeah. Yeah, but Cape Town, but he's not in Cape Town. He's in up and out of Cape Town. Zanzibar. Actually, is that the area I'm talking about? That might actually be it. Zanzibar? I don't know. That rings a bell for a reason. But anyways, I love China. I've been to Hong Kong, Shenzhen, Guangzhou, Shanghai, Beijing, Chengdu. Hey, let's go to Wuhan. All right, so anyways, so that's the sell zone for the week. You can already see I have the strategic price action mapped out. Okay? And now we have to think about the fundamental rationale of these moves. There's an extreme caution on this as a bear. It is technically not bullish. And I've already identified this as today's high based on what I see on the daily chart. And I know fundamentally nothing's really changed. So as far as a shorter term move, if you're asking me, and many of you guys are asking, I'd think, yeah, we end today around 1900, and Monday, Tuesday, we move on our way to 1800. But I predicted $1,800 an ounce a month and a half ago, I think, if I were to guess correct. Okay. Oh, you want to know the projected low for this week? We didn't get near it, of course. Let me add to that because I have it turned off. The conservative number I have turned off. Let me do that and add that. And I'll tell you what I thought on Sunday. So I actually made this trade plan last week. Yeah, last week, guys, what we're talking about, I did all of this last week. So we're on Friday, and it's not like I'm making a decision now. Dude, I made a decision on this at least 7 days ago. But I think I made this Thursday of last week when I drew this. Okay, this stuff here. This is an important distinction, guys, a very important point. Thursday of last week, I created my trade plan. So I already know what I'm doing today. I already know that. I did that 8 days ago. But I now have to adjust because my target 8 days ago, okay, was somewhere between 1861 and 1841. So let's just call it 1850. And we didn't get there. So now I'm going to have to make some adjustments. It's probably just a timing issue. And then this drop here, and then the flattening out, there were holidays and stuff. And then we had the meeting minutes, and then we had, all this news. And now we're here, and probably the next week we'll come down and probably hit this. Dude, looks like people want to go to Africa. Let's go to Africa. Well, the thing is, though, it's a challenge, right? It costs me a lot of money to go to Africa, and money is a difficult subject in Africa, isn't it? The average household income in Africa is a lot less than many other parts in the world. I don't know. But Angolans and Nigerians, they're all filthy, stinking rich with oil, right? I don't know about that, right? So that's the thing. So look, if you guys want to get to, right? If you want me to come to Nigeria, Angola, South Africa, I'd like to visit, and I'd like to visit some of the oil fields and all that kind of stuff, and see the cities and all that kind of stuff, and meet the people. And that sounds great, but dude, that's going to cost me a lot of money. So then we'd have to pass it along and say, well, we're going to need, we need to charge money, and we're going to need a fair amount of people then to keep it affordable per person. So I don't know. Can we get 300 people together? Do 300 people care? Okay. That's the issue, right? Now put that into contrast. I can fly to Cuba for cheap, and when you get there, it's ridiculously cheap. You can fly and hang out in Cuba unbelievably cheap. I mean, it's unbelievably cheap. So maybe it's more affordable just to we all fly to Cuba. But the thing is, I don't think I'm allowed to talk about Forex, but we can talk about economics. So anyways, so we got to think about it, but you let me know. Yeah, with 5,000 euros, you can rent a room for a live meeting, catering service, and all that. Yeah, I think when I just was reviewing old numbers of when I went to South Africa, and I think I spent about $13,000 on my airfare and on my hotel room. So just me showing up, right? Dude, we would probably need to spread that over a lot of people in a poor country. In a rich country, it doesn't matter, right? Rich country, that's not a problem. In a poor country, you need more people. But the upside of that is I can help more people. So I don't know. So there's all of that, right? So yeah, there's money to consider. All right. So anyways, we've talked about that. We've talked about that. One peso for 4. Wait, can you flip that around for me? I'm struggling. How many peso does a dollar buy? What did I get? I think when I did my research, it was 100 to 1. And then I went onto the street and I went into the black market and I bought my money on the black market. And I think I got 150 peso. And like 6 months earlier, you only got something like 80 peso or something. So then suddenly I was getting 150. And I think by the time I was leaving, it was 160 or 170. Can you reverse that though? So I'm having a brain fart. How many peso do you get for a dollar? I can't multitask. I can't do a webinar and do that calculation. Nigeria is vastly rich with oil and gas. Yeah, but corruption and over 100. Yeah, that is your country. Yes, but I would love to visit. The thing about Nigeria, and I often ask people, I said, what's the largest or most populous English-speaking country in the world? Nobody ever says Nigeria, but that is the truth. Nigeria is the most populous English-speaking country in the world. Yeah, what a great place to visit. The thing about a poor country with lots of corruption, it sucks to be rich too. You know what I mean? Where sometimes when you go to a poor country, everything's cheap. And you're like, yeah, I can live like a king on pennies. But then some places you're like, okay, but when you're rich, everything's expensive too. And you're like, what? Well, that's bull crap. You're like, really? I'm paying a monthly wage for a cocktail? And that gets weird, right? You're like, dude, I can give this $30 to a local and it'll change their life. And you're charging me $30 for a whiskey? Well, there's no, anyways, right? So, yeah. But yeah, Nigeria, I don't know anything about it. I'd like to see it. I studied it from a point of view of oil. Okay, so Bitcoin down. Yep, that's one thing we talked about earlier today. Not a lot of movement on NFP. Yeah. Well, if you think the dollar's going to stay weak, J-Man, then Bitcoin you would think would go up. I did yen pairs earlier, but maybe I didn't finish the thought. Okay. All right, so here is an opportunity for some. Okay, we had a lower low, which creates a lower high, which creates a lower low. So that would be the plan over the next couple of days. It could be on the short run, JD. Yep. So we can go take a look at that in a second. It's not open yet. So guys, thinking about it, I think we should visit like 5 cities in 10 days or something. Like fly to London, fly to Cape Town, fly to, I guess, no, fly to London, fly to Dubai, fly to, well, Cape Town. See, I've done the trip, but multiple different trips. So I've flown from London to Cape Town, but I've done weird things like fly from Dubai to Hong Kong. And you're like, wait, what order am I going in? But anyways, put it in order, like hit 5 major cities around the world where we can just get 100 people together. And, I can do a half-day training so that I can sell a ticket and then declare everything properly, and which is important to get travel permits and all that kind of stuff. Helps cover my costs, right? And then we basically just have our cocktail party and meet and greet and get some pictures together. Maybe I'll launch my book on that tour or something so I can write it off as a global book tour. That kind of stuff. Maybe we can do the get together in a bookstore and we all show up and everybody there pre-orders my book. Yeah. And then we all go for cocktails somewhere next door and we don't have to pay for an event room at all. How about that? So what you pay a fee, and what happens? We get together, we get our meet and greet. I do my little thing. Included in the price is a pre-ordered book. So I cut a check so you cut a check to me. Then when we all get together, everybody that shows up, I'll cut a check to the bookstore to pre-order the book. Remember, I don't earn any money on the book. But then it goes into the system that you bought the book. So when the book comes out, you'll get the first copy. You see what I mean? Like we'll just kind of, we'll do it that way and we don't have to pay for a room at all. We'll just meet at the bookstore. They'll give us a room. If we can get 30 people to show up to pre-order some books at their shop, shoot, let's do it. Okay. So anyway, so that's that. That's Swissy. We want to talk about pig. Okay. I'm going to move my stop to break even now. Okay, great. So here we are. Let's talk about this. Up, 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 down, down, buy, up, 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 down, down, buy, up, 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 down, 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 down. Uh-oh, red alert. Up, 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 up. Down, down, up, down, up, down, up, down, 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 up, 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 down, 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 up, up, down, 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 up, up, down, 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 up, up, down, 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 down. Whoa. Okay, what day did I say get ready for a potential change in direction on this pair? Yuvraj says, hey, has pound yen changed? Well, you can see I'm short, so I hope that answers your question. Nairobi would be amazing, Evans. So everybody says it again, Canada Day. That day is this day. Okay, is it fair to say that I said be ready for a change in direction at this day? Did I say that in January? January. Did I say that in January? Is that, yeah, Tanzania. Yeah, maybe, man. Adam says yes. He affirms. Johnny says, yeah. Okay. Several people have confirmed. In January, I said, be ready, willing, and able for a change of direction. Check this out. I'm short on that day at this price. And I predicted it precisely 6 months in advance. Yep. What do you stink about that? Smells pippy, huh? So I don't know if I'm right, and I'm not suggesting you can set up trades that early. What I'm suggesting is there is researchable information out in the world, and you might not know it. There might be an information gap. And if you feel like these things blindside you, it's because I knew and you didn't. The interesting thing is for $88 a year, I might be able to fill in that information gap. AKA, you could probably learn by becoming a member of Investor Bootcamp. It's a sales pitch. I get it. I know. So you either hate it, and you're like, oh my God, what a scumbag. He's such a loser. He wants to buy a yellow Lamborghini with my $88. All right, fight me. I don't care. Fight me. Sure. You don't want it? I'm all being greedy? Okay. I'm not going to be able to help you if you think that way. So if you want to fight. Go ahead. Just go do your own thing. That's cool. But the information has already been gathered and shared. It's whether you want to plug in. I feel that if I charged you $1,000, it would be worth it. But I charge $88, not $1,000, not $9.99, $88 a year. So, yeah, I'm trying to make it accessible. Well, I have a GTS, J-Man. I don't want a turbo, but yeah. InvestorBootcamp.com. Cool. All right. So what's the next play? Well, I have to reset this chart. Hang on. You go here, go to biased pivots. And this is bearish mode. It was bullish. I just haven't changed it. And so you see price falling here, this red candle. Okay. It's falling off of this line. This is based on where you should sell on Monday. Yeah. Now check this out. Yesterday, when we were up here, this was the projected sell zone for Friday. And this was Friday's target, which we hit as we rolled into non-farm payrolls. We were already done. So retail would have played this green candle back up. But you know what's happening? The smart money's already out. They already made their money. And where are they getting back in? This is the new sell zone right here. Look how accurate it is. And what you don't understand, if you're a new trader, a retail trader, what is now called a mass trader, I kind of like that instead of retail. It's very poo-poo, but a mass trader, the masses. They're going to show up on Monday and they're going to say, hey, fellas, what's going on? Are we buying or are we selling? Just like the people that said that to me today. If you don't know what's going on when you show up, you're going to be rolled over. Someone is going to just run over you like a freight train, because the money that you see here on the red candle is based on what the market is projecting to do on Monday. So if you show up on Monday, you don't understand that people are already trading Tuesday or Wednesday. More like Tuesday, okay? But they might have a plan on Monday, right? Or Sunday, they're planning on where Monday and Tuesday's entries are going to be and where the projected low or high is going to be, depending on if they're bullish or bearish. And so institutional investors like myself will think, bare minimum, what I'm going to do tomorrow or the next day, and at a bare minimum, where we'll be 3 or 4 days after that. Okay. Friend of mine who's a hedge fund manager, he focuses on Forex, but he does it in a different way. And it has a lot to do with, well, a lot. It's a complex options strategy on private contracts in FX. Okay. And so my watch says it's almost 9:30. At 10 o'clock, he has to have a plan in place for all of next week. Where all the highs are going to be, where all the lows are going to be. Plan A's and Plan B's for the Plan A and Plan B. Okay? Where he'll make money, where he'll break even, where he'll need to hedge. All of these things are all thought out. He's doing it right now. He's probably sweating bullets and in sheer panic mode and probably talking to all the members of his team. He's probably going through his charts like crazy, and he's probably going to send me a text or an email 5 minutes before 10. What do you think of the euro pound? Right? But my point here is that's what he's doing as an institutional investor. He's not planning what's going to happen over the next 3 days. He's planning minimum what's going to happen all of next week, but really the rest of the July and the rest of the quarter. And so, like, for those that show up like, hey, what's up, fellas? Should I buy gold or sell gold? I'm going to run you over like a freight train, and if it's not me, it's going to be a whole industry of other people that are way more informed than you are. And you got to, like, I'm not poo-pooing on you. I'm waking you up. This is your wake-up call, bud. This is a full contact sport. You're in a competition. You're competing with people. And if you're honest with yourself, when you roll into a group like ours right now, and you're like, should I buy euro or dollar? What you're saying to everybody else is you're unprepared. And this should be your wake-up call where you need to get serious now. Okay, the boy's got to grow up to be a man. Ladies too, I don't know. Same thing, come on. Time to put your big girl panties on and get serious. This is a business, man. Okay? Oh, Maida, you're killing me. No way. It's doubled since I was there. Holy, since January. So there's 100% inflation in 6 months. Dude. Maida, that's crazy. I got to get back. I've never been in a place like that. 100% inflation in 6 months? What is that? 300% a year? You're thinking it's 200% a year. No, but it's growing exponentially. Oh my God. Do you think the hotel is half price, Maida, or do you think the hotel is the same price? The currency's dropped by 50%, but the hotel is probably exactly the same price, huh? Dude. Dude. Yeah, I instantly think of all the people I met. I just went silent. I realized I went silent. I'm thinking about all the people I met, and they're in trouble, man. They're in trouble. That waiter of mine, I basically had my own waiter at the fanciest hotel in the outdoor garden, which is one of the most beautiful spots in Havana. And I had my own waiter because I tipped him, I think $12 or something, right? And he was so grateful. So grateful. I made such a big difference. Oh my God. I feel like he needs help, man. Holy smokes. Because if your costs are that high now, wow. Yeah. I had a fixer to drive me around and take care of everything, and he was amazing. And I tipped him like a day's wage, which, well, for working for me, which is 3 months salary. I basically tipped him 3 months salary. Now it'd be 6 months salary, the same amount of money. It's just amazing. So, oh my God, I got to get back. That's my first thought. I got to get back. Wow, that is just stunning. Yeah. It's Investor Bootcamp. Just so you know. Of course he's from the government. Of course. In fact, so I met with the head of foreign exchange for the government. And I think I asked him. I think I did. Was it him or the guy that referred me to him? No, it was him. Yeah, okay, Maida, I asked the head of foreign exchange for the government of Cuba, hey, I need a fixer. And so when I met with him, that's right, because I remember now when I met with him, I said, let's just meet at the hotel. Do you want to just meet out in the garden? Yes. Like, it's that nice. Like, even for a Cuban, you're like, yes, man. So anyway, so he rolls up, and we sit down over in the garden. And I'm like, hey, I just want to thank you for introducing me to Elio. He's the perfect guy. He's just so perfect. I love everything about him. And he's like, yeah, friend of a friend. Yeah. Cuban FBI. But whatever, I liked him as a person. So, yeah. But spies are supposed to be likable, I guess. But anyways. Well, Maida, I met his wife. I met his children. Right? Right? So, anyways. All part of the song and dance, maybe, yeah? Mm-hmm. All right, so this is coming down. That's great. Let's move on to another one. I did this one already. Let's get that out of the way. Okay. How about this one? This is my euro. See, look at all the people that freaked out on non-farm payrolls. Okay, it came up. I didn't freak out. I moved my stop to break even. And now it's going to try to make a lower low. Of course, if you look at it on a higher time frame, okay, it's just kicking off some bigger moving averages. Okay, I'm a little concerned now because of the daily 21. Okay, but my chart is also telling me, because I'm looking at the future 21 as well as the past, the leading and lagging 21. So I have a combination of things going on here. And what it says is there, we could do something like this in the future, where it comes back up and then maybe back around longer term. Oh, you want to do some NASI? Yeah, it's time to flip over. I just want to also point out this one first. Okay, we're at the weekly target and we're at a monthly central, so be careful on USD yen. Remember, this is one I was very, 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 very bullish on until last week, the last week of June. See ya, Joe Moo. Okay. So I was bull. Let's go back into here and redraw this. I was bullish. And then this is the big out. And then the big, what if there's a reversal on Canada Day? Canada Day. That's Canada Day. So be ready, willing, and able. RWA for down, even though I've been up forever. Right on time, right on schedule. But look, if you're a bull now, you can consider buying it back. This is a buy zone, by the way, just in case you don't know the basics. This is a buy zone. Technically, this is still bullish, but very, very, very caution. Okay, extreme caution for some of those. So those that are now selling now after the fact, you're still going to lose money. Okay, again, you don't do all these things after the fact. So what did I just say? There is no coupon. Sorry, Brodo. It's only $88. What are you talking about? I mean, okay, it's $88. It used to be. I used to charge hundreds and then at some point thousands. So it's $88. And by the way, here's what happened. When we got hit by COVID and people were locked down, I dropped the price of, then it was FX Bootcamp. I dropped the price by 90%. Okay, Broto. I dropped the price by 90% as my contribution to society while we were all going through COVID. I just haven't raised it again. So I know I come across like an arrogant jerk. I get it. I'm probably one of the most confident people you've met, but I've kind of earned my confidence. But if you don't know me, I'm a jerk. I come across like an a-hole. I get that. But the longer you hang with me, I'm probably only a jerk and not an a-hole. There's a reason why it's cheap. Yeah. Because I think I'm doing a good job. And I got a lot of side projects going on right now that I also want to contribute to society in other ways. There are plenty of ways to give back. So this is my main way to give back. Yeah. Investor, Bootcamp, investorbootcamp.com. You literally type the words in, investorbootcamp.com. You don't have to Google it, just type it in. Okay? For 20 years, it was called FX Bootcamp. So now you go to FXBootcamp.com and it takes you to Investor Bootcamp. So even though it's new, this is only 4 days old. I've been running it for 20 years. Okay, so I'll give you the link. Yeah. I don't have the tour up. This is literally 4 days old. I've been too busy. I'll need to do the tour maybe next week, okay? But FX Bootcamp itself is almost exactly 20 years old. So it's time to grow up, get big, get serious. Okay, cool. Oh, we want to talk about stock indices. What time is it? Yeah. All right. It is FX Bootcamp, Stingray. Okay. Here, let me show you, Stingray. All right, so Investor Bootcamp. So I log in. Okay, I log into my account. And you're like, that's exactly what FX Bootcamp looked like at the dashboard. Yeah, I know, right? Swing trading group. Okay. Here's how I upgrade to the day trading group because this account only has swing trading. Okay, there's yesterday's meeting recording, part 1 and part 2. By the way, did anybody have fun yesterday in the swing trading meeting? How was it? I taught people how to be and trade like a market maker. I introduced them to a real market maker, not some esoteric, oh, the market maker's hunting my stop, eh? No, I actually introduced you to a market maker. You listened to him talk about his world and his strategy. And then we went through the charts setting up a stop hunting regime. That was only part of the meeting. We went through charts setting up strategies based on stop hunting like a market maker would. Clear out all the stops and make some short-term money. I also showed people how to think and behave like a portfolio manager at a hedge fund. And we went through and we had conversations just like we would if you worked at a hedge fund. That's what we did yesterday. Okay, cool. Going back to the dashboard, here's where all the video training courses are now, right? The Trade Planning Essentials, Introduction to Forex, Guide to MT4, MT5, Forex Trading Basics, Technical Analysis, Principles of Price Action, Central Banking Fundamentals, Macroeconomic Principles, Swing Trading for 100 to 300 pips, Day Trading, 33 to 99 pips, and there's more. Oil Trading Course. You're like, an oil trading course? Look, do you know the difference between drilling and fracking and tar sands? Look at this. This is no joke. This is an hour-and-a-half lecture on fracking in one of these 100 lessons. You will learn everything, right? Look at this. You'll know how to frack. And it's, interesting. And then you break it down with acid and you look at it, you're like, oh, there's oil inside the rock. But how do you remove the rock from the oil? That was always the problem, especially when it's a bajillion miles below. Okay. And so that's what we're talking about. Think about it, that there's hydrocarbons that are liquid, and then there are hydrocarbons that are, we'll find the viscosity can change in the liquid from what you would think of oil to tar. We'll look at that. But what if it's even less liquid? What if it's actually caught in the stone? How do you get it out of that? Okay, so if it's rock, we can't get enough out to even pay for the drilling. So no one did anything for it a very long time. It was wider. And inside that pipe, we're pushing mud, which then comes out, cools the bit, but then grabs all the stuff at the bottom, right where we're drilling, pressurizing, and then the extra mud goes up the sides of the empty space, pulling all the material up with it. So it's somewhat
like, I'm not even joking. Every hose and every pipe and every little piece of tool in the entire energy complex will be discussed. This pipe goes from here to a pressurizer. And then from the pressurizer to either raise the pressure or lower the pressure, then it sends the liquid and the gas over to a vertical separator. And then from the vertical separator, the gas and the liquid and the solid is separated, and then it goes over to a heater treater. And this pipe then goes to here, and here's a gas outlet, and this is going to go to the meter run, and then this goes up, and then this goes over there. Like, we're literally going pipe by pipe, piece for piece. And that's just in the oil trading, right? So the oil trading course is 15 hours, 20 hours, 20 hours. I mean, look at this, guys. It's crazy awesome. Hour and 20 minutes. So you can learn, understand
pretty
geology.
close to that Civil War. All of a sudden, bloop, there was a major change of suddenly and store their gold. But anyway, so there is a process to this. So I want you to get this process. Ever been to a place like this? However, it's pretty rare that the earth is flat like that. Okay? The earth moves and it gets bent and shifted and even up. Bloop, 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 bloop.
So anyways, dude, what a great course. This is Investor Bootcamp. It's going to blow you away. It's worth $1,000. I charge $88. It's stupid. But I'm not, I don't know. Makes me feel good. I don't know. It makes me, I don't know. I don't know why. It's stupid. Okay. No, Andrew, I did that live and it's gone. I did it live. People paid extra for that extra stuff. I did it. I think it took me 6 weeks to give the extra value to people that attended and paid money to attend live. I respect them. I appreciate that they paid money. It helped me cover some of my costs. Each time I do a course, it costs me thousands of dollars to build it. I have PhDs work for me, and we put all these together, and the animations are great. So anyways, it helps me recoup some of my cost. I spent 6 weeks with those people, and then I destroyed the videos, and they're gone. I'm sorry. They're just, I looked even. No, so I can't give them to you. I can't sell them to you. I gave it to those who signed up. And out of the integrity of that relationship, that was final. Yeah. So when I give you a one-time offer, an OTO, yeah, it's real. Okay. Kevin's like, I've been a member since November. Literally the best ROI I've ever had. Yeah, I mean, it's dumb, right? Yeah. So anyways, go check that out. So for everyone that was a boot camper or and all that kind of stuff and is freaked out by this change, you'll notice like, oh my God, this is exactly like FX Bootcamp. It is. I just rebranded it. So you don't have to freak out. So that was addressing that question. So yeah, so now we're at the extreme lows or highs of the day. Are we back at that old top on gold? I see that. Let's try it here. Yeah, I can see. It's interesting. So we'll see what happens. It's gone the full Monty. It went all the way back and then all the way back up and all the way back. Oh, yeah. Okay. So here, what you have to do is set up a trap and break. Where's my little drawing tool? Okay. So now we got to set up a trap and break. And that's that. And I'm trying to get rid of some of this other stuff. I can't, though. It's older. Let me back up. Okay, that's next month. I'm going to switch this over a little bit. It's going to ruin it. Hang on. I don't want to ruin everything we've done. So let me do biased pivots. I'm going to do next week for gold. And go 4 hour. And it's about the same. So it shows you that we are in a range. So next week, currently, depends on how today closes. But next week's projected high, if you're a bear, is the here. So if we're above there next week, I go neutral. Okay? I go neutral. You might be a bull and you're game on. Sweet. I'll wait my turn. Okay? Okay. So this is today's current high near the daily 21. This is next week's projected high. So it's sort of you're in a range type trade. And I think I drew it that way, actually. Like, remember how this was all sideways and then it broke down? I think I had it doing this, right? And then maybe next week a breakdown this way. Yeah. So what if this breaks to the upside next week and it does this? I'm neutral. I'm neutral. That's all. And I will probably look to sell it either 1950 or 2000. And I'll wait for the price action to tell me when to get serious to be a bear again. Because you have to understand my strategic point of view on this asset is that we are in and will continue to be in a disinflationary environment. And in that scenario, I will sell highs in gold. Okay? So a trap and break strategy is really simple. Again, very basic trading strategy here, where this is our identified bottom, this is our identified top, and on a smaller time frame, you want to analyze a rollover and target the bottom. And if you're really bearish, you wait for the break, okay, because you trap it in this section, and then you wait for the break, and then you add to your position on the retest. Okay? Because ultimately, this is still a lower high, and this would then become the new lower high, but preceded by a new lower low. You see? This would not be a higher high. It's not higher than this high, and it's not higher than this high, and it's not higher than that high, and it's off of that low. So this is how we connect all of that. So as long as we don't go higher than that, it's still technically bearish. What it's telling you is you're looking at it on the wrong time frame. Okay. What it's saying is if you were looking at this on a weekly time frame, here's what's happened. Okay. Down, 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 up, up, down, 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 up, up, down, 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 down is the next target. Okay. And that gets us to probably September. Okay. there could be an ultimate breakdown, and I've already identified this for my members already, so we already know this, that we're probably on our way to meet up with the fair market value priced around 1800. And then there might be a change. And then, well, we'll discuss that then. Okay. So like I said, if you're really amazed on what gold's done over the last 2 hours, I'm looking at it from the next 2 months. So you can be enamored with it. Sweet. Awesome. And if it goes higher than I like, I'm not going to buy it or sell it. Okay. Okay, so yeah, I believe there's a reasonable probability that we end up on our way to 1800. So I think the thing that's happening right now is we were at 2000, then rejected, and then we retested 2000, then we dropped to 1900. Now we're going to get rejected there. It's going to come up 1925 to 1950, and then it's going to drop all the way down to 1850, then it's going to rally to 19, and then it's going to drop to 18. That's what I think is going to happen. So that's what I'm going to try to do. If I'm wrong, dude, look, I think if you use technical analysis properly, it's significantly easier than probably what you're doing. Okay? So let me explain that. Let me defend that. So I'm talking about, I'm only going to short gold because I've made a macroeconomic decision. Okay, great. So now I have some reasonable prices, 1925, 1950. I probably want to get short. Okay. So now I can drop into a 1 hour or a 15-minute for that matter. Okay. Okay, let's even do a 15-minute chart. Okay, cool. Well, what I'm trying to get at is if I follow my rules of engagement, let's do it this way. Let me go to this 4 hour. Okay, let's just assume I'm wrong. And we're not only going to 1950, we're going all the way back to 2000, which is way above at the top of my chart. Okay, so I'm wrong, let's say. So price ends up doing this. Well, if that's true, the 21 will be above the 55. Remember, I'm a bear. So how do I avoid losing money even though I'm wrong predicting the future? The 21 won't be below the 55 anymore. The 21 will be above the 55. I can't sell. Oh, but what if no. So if I'm wrong, what will happen is technical analysis will confirm that I'm wrong. And it will prevent me from entering a trade. That's it. So I'll stare at this, wanting to sell it at 1925, but it goes up. Then I want to sell it at 1950, but it goes up. Then I want to sell it at 1980, but then it goes up. And then I want to sell it at 2000, then it goes up. Hits 2000, makes a lower low, makes a lower high, makes a lower low. 21 crosses below the 55. Makes a lower high. I sell. Makes a lower low. Makes a lower high. And we're working our way back down. Good. I prevented 3 losing trades, and now I'm in a winning trade. Now, if you're looking at your charts trying to figure out what to do, the answer isn't there, my friend. You're not doing it right. Now you're like, but that kid on YouTube tells me this and that and the other thing. Oh, has he been trading for 20 years? Did he have a career before becoming a trader? Did he have dinner with the King of England? Did he manage a company of 3,000 people? Does he have a Harvard degree in macroeconomics? Has he ever traded $1 billion in 1 month? Well, maybe that kid on YouTube doesn't know jack. Huh? Oh, he wants to spend $200,000 on a Ferrari or a Lamborghini so he can show to you how successful he is? Is he willing to spend $200,000 on his education? Is he putting $500,000 toward his children's education? Well, then he's a boy, not a man. That's small time money. Yeah, there's a difference, right? I think so. Again, comes across arrogant as hell, right? It's not what I'm trying to say. Sort of like a wake-up call. Okay? I'm trying to wake you up. Time to get serious. Let's go to that stock market. Okay? So far, the only thing that's happened, I gave two strategies for this. One was a buying opportunity there, and another was a buying opportunity here. And the reason I have this vertical line is to say, well, if you only looked at this chart, you would buy it here. By the way, I did this 2 days ago, maybe. Can anybody confirm this conversation? I think it was probably 2 days ago that there's a price action trade and there's a moving average trade. There's a leading indicator trade. There's a lagging indicator trade. Talked about it days ago. So you could have been ready for this. Now, the next thing I said is this vertical line is based on information not on this chart. Has nothing to do with technical analysis at all. But it does represent, at this point in time, not a day early, not a day late, on that point of time, the probability, we'll call that the percentage likelihood of suddenly coming down significantly is higher than before. That's all we know. You don't see it. It doesn't exist on your chart. Your MACD doesn't see it. Your moving average doesn't see it. Your price action doesn't see it. There's nothing technical about it. But the risk is increased. And if you don't know that, then you are going to be in one of these situations where you might be blindsided and just totally run over bearishness after months of bullishness. You're like, this is crazy. Just out of the blue, it reversed. And then you'll watch Bloomberg and CNBC, and they'll give you a really good reason why, you know, Tesla's having a problem getting lithium for its batteries, and this is really bad, or nobody wants to buy a $3,000 headset from Apple, and it's a dumb idea. What? Right? And that you give Mark Zuckerberg hundreds of billions of dollars of your time, your money, and your advertising eyeballs, and what he does with it is copy Twitter out of spite. You're like, dude, he should be fired. What the hell? Oh, well, let's push the stock up. I'm like, whatever, dude. That's what somebody does with all that money. Well, I'll build a Twitter too, and we'll see what Elon thinks of that. Dude, you're all freaking fired. All of those guys, right? It's amazing. Okay? And they'll tell you why it's coming down. I'm just giving you a heads up. I'm not projecting that this happens. That's how you do the setup for a Head and Shoulders. But the thing is, I think the probability of it happening is higher there, and I predicted it months in advance. We just happen to be here now. I just happen to draw it. And even in this period, I said, get ready. Get ready, get ready, get ready. And look at this. On the exact day we printed the high. So I don't know, maybe it does this. Irrational exuberance, but that's okay. We're not going into recession. People are not losing their jobs. ISM said not a problem with the job market. ADP said not a problem with the job market. The trend in weekly jobless claims, not a problem in the job market. Non-farm payrolls, not a problem in the job market. Challenger Christmas and Gray said, there's no challenge in the job market. There's no challenge in the job market. The Fed meeting minutes. Wages, right? Jobs and wages are persistently strong. There's no problem in the job market. So maybe this goes up. But I'm not talking about economic data either. I'm talking about the normal ebb and flow of capital. 20 years worth of research. And so, again, there's no prediction. I don't make market predictions. But if this starts to happen, you better believe it's the baddest. Okay? So thank you to FX Street for hosting us. 207 months in a row. I've been doing this one webinar with FX Street for 17 and a half years. That's longer than YouTube has been around. I want you to really think about that. This partnership and relationship, this like 19-year relationship I've had with FX Street. Okay? But even this 17 and a half year old webinar is older than YouTube by a lot. Years before YouTube was invented. So awesome. And I see the world now. I'm an old venture capitalist. I constantly see bigger and better ways. I am thrilled with AI. And I'm plowing money into AI. It's really cool. But right now, it's human-to-human interaction. If you want to learn how to trade Forex, cool. I think you really should check out QuantBox, honestly. I mean, I built it. I think you should check it out. You saw some of it today, but I mean, dude. And I'm going to spend next week, I'm going to send out probably a dozen emails, maybe one a day for 2 weeks, because I've increased a whole bunch of new tools. I've created a bunch of new tools. I'm just going to give to pro members at no additional cost. More benefits, same price. I've spent a lot of money building it and a lot of time, and it's going to blow you away. I'm not even joking. I'm so excited to show you. And then on top of that, we're doing a lot of different things better. And there's a lot of new improvements and a lot of tweaks and a lot of bug fixes. And so retail's going to get some new tools. Okay. Retail's going to get some improvements. And then the pro traders are going to get a lot of new stuff that is way powerful. Okay? Way powerful. And I'm not even joking. I'm going to knock your socks off. So get a second pair of socks. And if you figure out the math, it's actually cheaper to be a pro trader. And I'm probably doubling your benefits. You're welcome, by the way. So now that I'm done with Investor Bootcamp and all that kind of stuff, I'm going to try to put some time together and introduce you to the upgraded QuantBox 2.0. And not only have I invested all that time and money into doing this for you guys, because it's your tool and you've invested money, and I'm taking your money, investing it into improvements. So if I'm launching basically QuantBox 2.0, I've already started 3.0. I'm already moving in that direction, hiring data scientists. And with economic degrees, data scientists with economic degrees, to look at how to incorporate artificial intelligence and machine learning to do complex macroeconomic analysis, really looking at a bunch of things and doing analysis. We're probably going to have to lean on neural networks a little bit. and be able to do amazing things with QuantBox that you can't even imagine. And I'm not talking about just doing comparative analysis of economic data, because that's looking at GDP quarter over quarter between the United Kingdom and the United States. But what if it could predict retail sales a week in advance? Now, how would it predict retail sales? Oh, it's looking at inventory levels. It's looking at GDP. It's looking at inflation. It's looking at credit card spending. It's looking at the cost of capital. It's looking at a bunch of things. How about it's looking? How about this? Like, one of the things it does to predict retail sales is track week over week changes in gasoline demand that we get from the Energy Information Agency. So we're plugged in, literally plugged into the database in the government. And in that database, under millions of tables, there's a table that shows you inventory levels of gasoline going up, down, or sideways. And then from that, tracking the 5-year average of those inventories. So you can say, is the inventory going up or is it going down? And relative to the norm, is it low or is it high? Take all that information. If people are buying up the gasoline, there's demand on their retail side. And that's one of the variables. It's calculating in real time, watching this database plus 500 other things, and we put it all together. What if I could tell you the retail sales number 1 week early? Because we're actually calculating what goes into the retail sales number. But we're doing it in real time using machine learning, artificial intelligence, and neural networks. And QuantBox spits it out early. I might be able to do it. So thank you for being part of that community. Amazing stuff is coming. The future is here. Any videos on how you're plowing in AI? No, I am teaching a computer how to trade right now. It's actually a neural network. We're in the algo phase. So you go in with algos, and then you use AI. And then once the AI is be able to start looking at patterns, and then you got to go to the machine learning and then say start studying millions and millions and millions of scenarios on all time frames, on all asset classes. What typically happens when you see any of these 1,000 patterns at these 50 different price level scenarios, like my pivot points and this, that, and the other thing, in combination with all this stuff, can you learn every scenario and come out and find out patterns that consistently make money? That's what I'm trying to do. And do you know what I'm going to do with it? I'm going to give you the results for free. So I'm just paying for it. Cool, right? Like literally, this is just one project that I have going on in the background. And that has nothing to do with QuantBox. So the idea here, guys, is what if you loaded it up to my AI in a trade plan and it gave you feedback? What if, like, literally you uploaded a trade plan before you took a trade, and it took you literally, let's say, 20 seconds to upload the trade plan, and then you open up your Gmail and our response is already there? How many people would appreciate that kind of feedback before you took a trade? And we do like trend analysis as well as fundamental analysis and all that kind of stuff. And you were able to just input, output. Would anybody use that? It's what I'm building. Yeah. Now, what if I could get 100 traders? Let's say everybody in this chat right now had the ability to anonymously look at your trade plan and let you know if they agree or disagree. So you had, in a matter of time, you had artificial intelligence look at it, share its thoughts with you, if you want to call them thoughts, share its analysis with you, and then got 50 people to agree or disagree, and you just saw how many people agree and how many disagree. What if the AI said absolutely not, and 80% of humans that are also traders like you also said, no, dumb idea? How would you feel if the AI said no way and humanity said no way? Would you reconsider, or would you at least put some additional thought into it? Yeah, I'm building it. It's already, the interface is already built. The site's already built. I'm building the AI part. We're building it's almost, I can't say it's almost done because we're training the AI. That takes some time. But the infrastructure's done. This is not a dream. I've already built it. It's sitting on Amazon Web Services because they have machine learning tools built into AWS. So I'm doing this for you. So super ridiculously quick, super ridiculously fast, super ridiculously helpful. And I want to do it for free. Maybe support it with advertising. Maybe I'll contact FXstreet and say, put me in touch with your media people. Maybe I can monetize this, because I need to, it'd be nice if I got my money back, right? Like thousands and thousands of dollars. It would be great. But anyway, so this is what I do, huh? I'm just trying, man. I hope my enthusiasm and my energy is changing from arrogant prick to like, dude, I am passionate about what we do. I love what we do. I love working with FXstreet for 20 years. And I contacted him recently and I'm like, I want to do way better. I told him, I contacted FXstreet. I feel like I'm failing. I feel like I'm failing FXstreet. I feel like I'm failing you. I want to do more. I need to know more about how I can help you succeed. I want you to succeed. And I feel like a failure. I want to do more. So I'm hustling like crazy. I got to build more. I got to be more because I'm here to serve you. I got other things going on too. Okay. I am launching a hedge fund. I do consult institutional investors. There's a lot going on, so I don't actually need to do any of this, but I love it. You're my guiding light in a world of darkness. So please, everybody, FXstreet, everybody here in the chat, everyone that's part of Investor Bootcamp, QuantBox, Trader's Way, I want to know how to serve you better more, because I'm probably only going to do this another 20 years. And I'm running out of time. I need to make you a success now, sooner than later. So help me help you. Peace on earth. May the pips be with you. May your profits above average. And of course, bravo to our moderator. Thank you, moderator, for moderating better than any moderators ever moderated before. Mediocre moderators turn their eyes away in shame when our moderator walks in the room. Yes. Yeah. Talk to you soon. Have a wonderful weekend. Remember, review your trades, identify your strengths and weaknesses, and come up with a strategy for improving next week. Don't show up next week and just fire off a bunch of trades and think you're going to get better. Think about the person you know who's been golfing for 30 years and still sucks. This is not a game. Take it seriously. How are you going to improve next week? Show up Monday with a written plan. When is my next live session? If you're in my day trading group, we meet on Sunday to set up trades for Monday. If you're in my swing trading group, our first meeting is Tuesday. where we do something called a stop, look, and correct session, where I provide you personal feedback. You upload trade plans that you've just designed, or maybe things that worked last week or things that didn't work last week, and you want some feedback. I look at your charts. You and I have a conversation in front of a few other people, but we have a conversation and I give you personal feedback. What we do is amazing. You can't even imagine what you're missing if you're not part of these communities.